Hello and welcome to myfinanceteacher.org. Let's have a look at precious metals. As I mentioned over here on the 11th August, just a couple of days into the new intermediate cycle in gold, we did increase our positions in precious metals a little bit. And in that post, I mentioned that this early August low in gold was the intermediate cycle low we were expecting when, for the last few weeks, I've been telling that, well, there's probably 35% chance that the late June low was the end and the new cycle is going to bring gold up. But on the other hand, there was, as I mentioned, 65% chance that the intermediate cycle is continuing, giving us one more decline before the new intermediate cycle starts. So we are early into a new intermediate cycle, which so far has been going on for only 10 to 11 days. But at the moment, though, I think gold is at pretty strong resistance levels from multiple highs and lows over here in late July, late April, and early February. All of those are around the round number of $1,800 on gold. And additionally, as you see, gold is just bouncing its head into the declining 50-day moving average. So there is a pretty strong resistance right around where gold is at the moment. And I think perhaps over the next few days, gold might decline a little bit before continuing higher into the new daily cycle as well as the new intermediate cycle. However, in the intermediate term, gold is going to be pretty strong, perhaps going at least up to the previous high around 1900 or maybe even higher within the ongoing intermediate cycle, because the cycle has just started and there is a lot of potential to keep pushing higher into somewhere around midpoint of the cycle where the tops usually take place. The dollar kind of confirms our short-term and intermediate scenarios on gold. We see the dollar short-term daily cycle is only 21 days old right now. Usually the dollar cycles last for around a couple of months. So dollar will approach its top, its midpoint in the cycle, perhaps over the next 1 or 2 weeks. And additionally, dollar has recently broken above the previous high, above this resistance at around 93.5. And the next resistance level is anywhere between 94.2 to 94.7. That's based on the late September 2020 and early November 2020 highs. So there's a good chance dollar continues a little bit higher over here to climb towards that resistance. That's when the daily cycle on dollar will probably be close to its midpoint, perhaps a bit past its midpoint. And that is when dollar will be ready to come down into at least its short-term daily cycle low. There is also a chance that the upcoming high in gold will also be the high of all of its intermediate cycle, which might help gold to push higher within the ongoing intermediate cycle towards that recent high above 1900 and even past that. So that's the alignment between the daily cycles as well as intermediate cycles in the US dollar versus the cycles in gold. Another thing that often influences gold is the rates. We're looking at 10-year rates, and what we see over here is that rates are cooling down over the last week or so, but I think perhaps there is a chance for rates to poke higher with the Jackson Hole close to the end of next week. That's if there is any indication of tapering. Potential tapering is now all over the news. That's when the central bank basically reduces the amount of bond buying. So if there is any hint of tapering, perhaps by the end of next week at Jackson Hole meeting, there is a chance that the 10-year rate pokes again to break above the 50-day moving average and perhaps go towards the 200-day moving average. And that kind of aligns with the short-term expectation for gold to struggle a little bit over here for at least a few days. Next, let's have a look at the Optimism Index in gold. There is a very interesting positive divergence in the Optimism Index versus the gold price. I think that is a positive sign, although there is still some level of risk because the Optimism Index didn't actually come as low as somewhere around 30. Historically, buying gold when the Optimism Index is somewhere around 30 is generally smart. But over the last couple of years, through the late 2019 and later, intermediate cycle lows in gold occurred when this Optimism Index didn't actually reach this green line at 30. Instead, they occurred somewhere around 40 to 50. In late June, this Optimism Index did already drop down to around 45. And that might be enough for the ongoing intermediate cycle, although The intermediate cycle actually continued after that into this early August low, giving us a lower low on gold price and perhaps a higher high over here on optimism if gold doesn't crash anywhere here, bringing optimism down, which I don't think is very likely. So if gold doesn't basically crash over here, optimism index is showing us a positive divergence with its higher low. Looking at GDX though, although gold has done well since early August, GDX just keeps dropping further and further down, and it's now deep into this long-term support zone anywhere around $31 on GDX. That's been the support resistance zone for multiple years, so it's pretty strong, and I think GDX is about to bounce out of here. Additionally, GDX is giving us a repeated poke below the Bollinger Bands over here, and the Bollinger Bands this time are quite wide. So a poke might actually indicate that a reversal to the upside is coming soon. And one more thing on GDX, let's compare it to gold price. This is the gold line over here. Over the last year or so, as you know, gold has generally been struggling, coming down from above $2,000 down to $1,700 recently. And while gold seems to have bottomed already, GDX is bottoming pretty late over here, giving us some sort of a negative divergence. What I want to have a look at is what happened to GDX after other significant declines, very long protracted declines in gold price when everybody was just getting really frustrated. Let's have a look at late 2018, for example. I remember this intermediate cycle. I did get a lot of negative comments on my YouTube channel at that time, when gold just kept dropping further and further down. And as you see over here, gold actually bottomed quite a bit earlier than GDX itself. That's likely because traders get really tired of this decline in gold, and any kind of a bounce in gold is used to finally unload their positions that had been painful for quite a while. Similarly, if you look at this late 2015, early 2016, that was December 2015 actually when gold actually bottomed. Before that, gold had been dropping for many years. We see that while gold bottomed in December 2015, GDX actually continued lower down into late January 2016. Again, one reason for that, in my opinion, is that traders are really tired of this downward momentum, and any kind of bounce in gold is used to get rid of their positions that had been so painful. And look what happened to gold and GDX after that. A very significant push higher after several pokes below the Bollinger Bands in GDX. So while in the short term, perhaps there is some weakness over here, in the intermediate term, I think precious metals should do relatively well. Next, let's have a look at the Optimism Index in GDX. And as you see, it's quite volatile. So we'll look at this green solid line, which is the 10-day moving average of this Optimism Index, which itself is the blue line. So whenever this 10-day moving average of the optics comes relatively close to this level of 30, that's usually when gold is close to its intermediate cycle low. That's usually when GDX is close to its significant lows. And what we see now is that back in late June, this 10-day moving average came very low, close to 20 or so. And while GDX has actually become even cheaper, indicating significant undervaluation, in my opinion, especially with gold price significantly higher, we see that this 10-day moving average might perhaps give us another positive divergence if GDX doesn't just break below that support zone of 31 with any significant violence. So again, while there might be some pain in the short term, I think miners are generally undervalued. But of course, this is an ETF including 50 to 60 miners, while any given miner might actually have some idiosyncratic risk associated to potentially some mismanagement. So you got to be careful there. Another reason for this decline in GDX, even while gold has actually been doing pretty well, is I think the general stock market, which has just been, look at it, just chugging along higher and higher for weeks and weeks and months. But at the moment, the intermediate cycle in the general stock market is 167 days old. Usually these cycles last for around half a year or so. So I think there is some correction upcoming over the next perhaps several weeks in the ongoing intermediate cycle in the general stock markets. Especially if there is some indication of tapering at the Jackson Hole meeting that might actually accelerate this decline in the general stock markets. And while initially tapering can be painful for gold, if stock markets are dropping, perhaps that will be the time for GDX to recover a little bit. Another thing that's truly exciting right now is energy. As this squiggly line shows, I was expecting crude oil to come down into its intermediate cycle low, and that's exactly what crude oil has done. Let's delete that squiggly line. And we're coming close to an amazing buying opportunity in crude oil. So perhaps over the next few days, I will come up with a more detailed overview of the energy sector. So why not join us at myfinancesteacher.org to get all of these, as you see, very regular updates on precious metals, energy, other commodities, general stock markets, and cryptocurrencies. For now, I wish you a pleasant Friday and a wonderful weekend. And of course, good luck in your trades.